All right, what's up, everybody? It is Thursday, July 30th. So let's talk a little earnings after the bell today. You had the big four of the tech giants. You had Google reporting, you had Amazon reporting, you had Facebook, and you had Apple, and they all crushed earnings. So we got a big pop in the NASDAQ futures. But right now, as I'm making this, S&P futures down a little bit, Dow futures down a little bit. Look, I get it. I get it. It's not hard to understand. These big tech companies, they're the ones that have been crushing the earnings. Their business, Amazon's business, been going through the roof. And in large part, mostly really, these names and a few others that I've mentioned in the past have been pushing the NASDAQ up to new all-time record highs. Although we're not going to see all-time record highs, new highs anyway, on these earnings reports. And if you look at the trading activity in the NASDAQ index, it kind of looks like it's making a top. Now, aside from that, let me get right to the stuff that I focus on, which is the fiscal flows. We are seeing a new deceleration in the employment and withholding tax flows. Now, you saw today, as I predicted, another increase in weekly unemployment claims, and last week's number was revised higher. I think it was originally reported as up 109,000. It was up 115,000. We had up 12,000 in today's report. So we're back up around 1.43 million, I believe, or 1.44 million. Claims are high. People are losing their jobs. And that's ongoing, and we see it in the data. The other thing now, which I'm really focused in on, is the overall spending. Like, you know, since the stimulus in March, spending blew through the roof. That was a major support for the economy. But as I've been pointing out, and I'm sure you know, like the $600 a week supplemental unemployment benefits that will end tomorrow, I am now noticing let me put it this way, no longer accelerating on those spending flows. They're still very, very high, and they're extremely high year over year, but that acceleration in the spending, which has been the feature basically going back to that first stimulus, the CARES Act, that acceleration is plateauing out. And what we will see very soon, probably as soon as next week, because the final payments, I think some people already received their final $600 a week check or payment. By next week, we are going to start to see that data, that spending data, really point to a slowdown in the spending rate. So that again is something very important for me. At least it's very important to consider. Here's another thing. Today's GDP report. Now, that came in at a record contraction in U.S. GDP. What was it? Down like 32 something percent, almost 33% U.S. second quarter GDP. That is a record contraction. The only thing in there that was positive, that added to GDP, right? There's four components. There's personal consumption, there's business investment, there's government spending, and there's net exports. The only thing really positive in there was government spending. You saw a little bit of an improvement in the trade deficit, but not much. So that was also a little bit of a positive, but government spending. But when they break it down in federal government spending, which saw a nice increase, as we all know, a large chunk of that was offset by states and localities cutting back. Now, this is an ominous sign, because Congress is not talking about aid to states right now. I mean, that was in the House bill, that $3.5 trillion bill back in, I don't know, I guess it was earlier this month. But that was shelved. That didn't go anywhere in the Senate. And the Senate is not talking about any aid to states. So what we're having here is kind of like the perfect fiscal storm, if you will. Federal government spending is going to slow down. Meanwhile, the states are not getting any help from the federal government. Their cuts are going to continue, And like I said, in this GDP report, those cuts by state and localities almost completely offset what the government was doing in terms of its fiscal support. So that is not a good scenario. I mean, that's really not a good scenario. So ultimately, we are going to see another slowdown in the economy. A lot of these job losses are permanent. Let me talk a little bit about gold and the dollar now. The dollar now down below 93 on the dollar index, so that trend is accelerating down as I said it would. Gold took a little bit of a breather today, silver too, but those trends are bullish. The pullback in gold that we got today, I believe into like 1930, something like that. I sent out an email to my subscribers to pick up some more at that level. We're about 1950, 1948 right now. The interesting thing about gold, if you look at the futures market, the open interest in gold futures, not that high. 599,000. Back in January, earlier this year, at the start of the year, that open interest was almost at 800,000. So what does it mean? 599,000. Not a lot of people still in this gold move, and we're at all-time record highs. So I think the potential is there for higher prices, and I think we will see that. Anyway, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Remember, when you sign up for the report, I send out emails all day long. I send out emails with recommendations, with observations, with insight, with some education. So you're constantly getting a flow of information from me. And also, go listen to my podcast. The new episode is out, episode 9. Both of those links are here in the description below. If you haven't subscribed to this channel, please do. And I'll see everybody tomorrow. Bye-bye.